Hi, Shilpa Ranipeta here from CNBC. Firstly, hi, lovely to speak to you for the first time, Niranjan. Hi, Priya again. Just following up on her question then, and you did say that the volume growth has been highest in the past 10 to 12 quarters. Are we seeing a normalization coming back after the GST rate rationalization? And do you think then we can expect the volume to be around, the growth to be around this range going forward? Because you did say FY27 will be better than FY26. And on the same line, if you can also give us an update on how the demand has come back, how's the current demand situation, especially in urban as well?
I'll probably pick up the GST part and let Priya add on the macro and the outlook. So on the GST, as we had outlined last time, so there was an impact due to channel destocking. There was an impact due to delayed pantry buying. There was also impact due to trade support that we had to do consequent to the GST. And GST, of course, we passed on the entire benefit through the pricing. As far as the transition is concerned, by November, everything normalized. So therefore, broadly, you can view December quarter as the normal quarter from the point of view of delivery of the growth. On the outlook part of it.
Yeah, I think adding to what Niranjan was saying, I think the way to think about it is we are seeing an improvement in consumer sentiment and demand. This is especially led out of rural, but overall across urban and rural, demand and sentiment is improving. I think both the macro factors contributing, whether it is the low inflation, all the reforms that the government has done, is leading to an overall improvement in sentiment. It is also combined with the measures that we have taken, whether it's in terms of our portfolio transformation, the channel double down that we are doing across, the modernizing of our brands, and going behind market development as the market leaders in the country. This is really starting to pay the dividends.
But that doesn't answer my question specifically in terms of the volume growth trajectory then. Do you think we're heading towards a higher higher single digit volume growth trajectory down the line then?
So we don't give guidance of specific numbers, but what we are saying is that second half 26 will be better than first half 26.
Okay.
And 27 will be better than 26.
Right. If I could just take a quick question. I just wanted to understand that, health and well-being is one area that you called out. You acquired Oziva, you have acquired the remaining stake, but what's the rationale behind exiting well-being nutrition? Because that is also very much in line with the kind of area that you're exploring with respect to health and well-being. So if you could help us understand what was the rationale behind exiting well-being nutrition.
Yeah, so first, let me talk a little broadly about health and well-being. And the health and well-being segment is an extremely important segment. It's an area of investment for us, which is why we have announced that we have acquired 100% stake in Oziva. We've also brought in liquid IV into the country. We have a further large Unilever portfolio, and Unilever has made significant investments, whether it is with Nutrafol, Ollie, Liquid IV. We have a whole range of brands. So this is a segment, an area that we are indeed looking at further enhancing and growing in the country. This is still a very nascent segment in India. As regards well-being nutrition, we had a minority investment in the company, and therefore it seemed we are doubling down behind Oziva at this moment.
And just to add, as part of our portfolio strategy, we'll continue to look at rotating the portfolio, making those choices where you do the capital allocation by investing, doubling down on one, while maybe divesting on the other. So it's a continuous part of our evaluation. On their own, even that brand has done well.